All right, Matt the Mortgage Guy here. This week, I want to talk about housing inventory, how it's going to affect the housing market the second half of 2021, maybe dispel some myths where people think that a little bit less demand and a little bit more supply means housing crash, means that things are going to be on sale for 20, 30% cheaper. Another myth is that things are going to happen really quick and we're going to see a quick turnaround in the housing market, which we know, if we've looked at history and looked at stats, is never the case. Things in real estate do not happen quick. So before I jump into it, like, comment, subscribe, all the things that YouTube algorithm likes. Straightforward, easy to digest real estate, mortgage, housing market information. Okay, without further ado, straight into it at the 45-second mark. Housing supply and how it's going to affect the housing market going forward. What we have seen just recently, June of 2021, is that demand has slowed down a little bit and supply has increased. And one is a function of the other. When people are buying less homes, things are sitting on the market for longer. As new stuff starts to come on and the old stuff hasn't sold as quick, housing supply starts to increase. So here's the thing I want to address, things that I've read, heard, seen in my comments on YouTube with consumers I'm talking to, with real estate agents I'm talking to. They, I think, are optimistic that we're going to see a big turnaround where we can flip from a strong seller's market to a buyer's market. I'm here to tell you that's not going to happen overnight, and it's very unlikely to happen anytime soon. We can go from strong sellers to seller's market, or strong sellers to seller's market, to a balanced market over the course of a year, but we certainly aren't going to flip in a matter of a quarter, in a matter of a month. And I think that this data that shows monthly supply of housing in the United States is one that we can look to and say, okay, what was going on in the past? And when housing supply was a lot higher than it is right now, what happened with prices? A cool part of this graph to look at, and it's not that far, it's not that long ago, so we don't have to rack our brains too much. But if you do remember the end of 2018, we saw a little blip in the housing market. We saw some price reductions. We saw in some areas a 5 to 10% pullback, whatever you want to call it, in housing prices. Now, some kind of missed it because it just felt like a slow winter, and maybe people just attributed things being on sale to it being wintertime. But here's what happened. We had nationally, October, November, December, 7+ months of housing inventory. When there's more inventory like this, generally things are on sale, right? And so what I'm hearing now is people saying, well, there's less demand, there's more inventory, things must go on sale. But what I'm telling people is when we go from 4.2 months to 4.6 months to 5.1 months, sure, we've got more supply, and true, the demand is also going down, but we're going to have to get up into this range, 7 months of inventory, before we start seeing prices level out and eventually correct, decrease, whatever the heck you want to call it, right? And if we get up here like we did, and rates are still great, affordability is still, somewhat decent, then this was 5 to 10%. This wasn't a 30% correction in housing. So we've got a long way to go. And most of us who are keeping our finger on the pulse would like to think that July, August, we will be up to a couple million homes nationally. That'll probably push this number higher if demand continues to wane in the summer months, which it probably will. People are traveling, people are doing other stuff. People aren't generally getting into contract the June, July months. And the funny part about data is people see that June is a really popular month for home sales, not realizing that that is April, May entering into contract. April, May, open house, listings, getting into contract, closing in June. So while June is historically a great month for real estate closings, take into account that that's 30 to 60 days prior when that stuff got listed and that stuff got into contract, right? And so as things continue to wane, I mean, 5.1, we'll probably see this number be even higher in June. I wouldn't think it would be, let's see, we went 4.2, 4.6, 5.1, 5.7 to 5.8 is going to be my guess for June. And then if we get above 6 in July, then things are going to level out. I mean, it's inevitable. And I agree with some people that thought they disagreed with me on YouTube saying, hey, Matt, I disagree with you that we're going to see less demand, more supply, and prices aren't going to come down. I didn't necessarily say that. I was corrected, and I stand corrected. People said that for now, right? And that was the part I left out. That for now, we're not going to see a decrease in prices. If this continues to go up and we get even more supply than we saw here in the end of 2018, sure. Can we see home prices go down by 5% in 2022? Sure. Can we see them go down by 10% in 22 or 23? Unlikely, but it's possible, right? And we can always, always, always trace it back to supply versus demand. And one kind of forces the other. Less demand forces more supply. What this humongous drop off was from April of 2020 to July of 2020 was not only the fact that there wasn't a lot of stuff being listed, but we saw more people buying, more demand than ever. I think what was the recent stat I saw? Either it was the trailing 12 months or it was the pace in which people were buying in 2021, something like 7 million home sales we're on pace for, when the average annual number is like 5.6 million. So if we have 20% more people buying and less things to choose from, no doubt, like we just go from 6.6 months of housing supply, bam, to 3.6, which in some markets, mine included, 3.6 months would be a welcome number of months of housing supply, right? Because I don't know where we're at now, maybe between 2 and 3 in Sacramento, but we're certainly not the 5.1 like the national number. We're still fairly low when it comes to months of supply. So hopefully this information was helpful. If you have anything to add, I'm all ears. I love to have people who might think about things differently, show me something I may not have seen. Let me know what's going on in your market, what you see for the second half of 2021. None of us predicted this, because none of us can predict a pandemic. I believe wholeheartedly that none of us know exactly what's going to come in the future, but a leveling off, a slight retracement is possible. What it doesn't mean, and what I keep hearing, is hold on, press pause, wait 6 months, a year, 2 years to buy. Things are going to be cheaper. Not necessarily the case. Let's say that we get up to 6 months or so of supply, rates tick up 3.75, 4%, 4.25. If you buy the same price that you could buy today, but you buy a year from now and you get a 4.1 instead of a 3.1 interest rate, you're paying much, much more over the life of the loan. If you buy 2 years from now and it's 5% cheaper than it is today, but it's 4.5% versus 3%, way, way more. Worst case scenario, you buy in the future, prices have leveled out or increased slightly, and the rate's gone up, then you're much worse off. So hopefully this was helpful. As always, I appreciate every single person who is watching, every single person who leaves the comments. Even if you don't agree with me, that's fine. Let's just be kind in the comments. Not everyone's kind, but that's just the nature of the beast. So I love you guys anyway. Thanks for watching. Bye-bye.